Hello guys, welcome to the end of the week market review. We will be sharing with you my technical analysis perspective on how the market had behaved in the previous week and what to expect in the coming week. Today I'll be sharing with you how the market had performed in the previous week. We'll also be giving an outlook of what to expect in the coming week. As usual, we'll be taking one or two currency pairs and possibly dive into some stocks, and we'll look at what the market is poised to do in the coming week. My name is Edinda Deshino, lead coach at Trading as a Business Group and private fund manager at Trendonomics Partners Limited. And before I dive into what I have for you today, kindly click on the subscribe button for you to be able to get updates on our videos, our trading educations, market trading insights, market reviews, and even interviews with other traders so that you'll be able to have a better understanding of how to trade the market. Also, I'll appreciate you make a comment on the comment section. Your comment is highly appreciated so that we have proper delivery, better delivery for you in the near future. Don't forget to share this video as well. Now, let's dive into what we have for you today. As it is our tradition, we'll look at the market from a top-down approach. We'll look at the market index. Then we'll look at what the market had done in the week. Then we dive down into individual currency pairs, major currency pairs. Then we'll look possibly some setups that we're looking at in the week and our drive one or two expectations in the coming week. We look at the dollar index. Looking at the dollar index, we'll see that the dollar index in the week, in over 2 weeks, after 2 weeks of constant decline, the dollar index had a marginal had a positive close in the week. And we'll see the dollar index closed the week positive. It opened at 10163 and closed the week at 102.162. So we saw a bit of buying resumption in the dollar index. This gave us an idea. We've always said that the dollar index has been on the uptrend, and has been on the uptrend, long bullish trend for a long time, and we expect that there should be a correction, and which it's actually doing. And now the question we are asking ourselves is this the resumption of the uptrend? But the way I approach the market is to have a gauge into the market, to have an idea of how to trade, because market trades in levels. So we must understand that if this is level for that the buyers are coming into the market. And as is usual of us, we draw a Fibonacci to have an understanding of where the market is in relation to some key levels. And we would see that the dollar index is yet to, using the weekly time frame, it's yet to get to the Fibonacci retracement zone. So we may see that the dollar index is still trading within a range. So we expect the dollar index to trade within a using weekly perspective. Let's dive into the daily time frame. So from the daily time frame, we pick this new trend, this current uptrend, and we'll see what's happening there. So you could see that from the daily time frame, the dollar index found support at the 50% Fibonacci retracement level. So the dollar index found support at the 50% Fibonacci retracement level. So that's the key indicator for us that on the short run, we may see a bit of a consolidation around this level and a breakout above, fully breakout. And in the week, it attempted a breakout above this Fibonacci retracement zone of 61.8, but it dived back down. So at this moment, the dollar index is actually slightly below the retracement zone, and there's an expectation that there should be a resumption in the dollar. Let's draw historical levels so that we also have let's draw some historical levels. We would see that the dollar index also should have some reactions around some historical support levels and resistance levels. So now we see that the underlying chart is trading within a range between and above some important historical levels. So what's our expectation of the dollar? We expect that the dollar should rise in the week. Now we expect that there should be a continuation, a resumption in the uptrend for the dollar. We expect the market to begin to buy into the dollar in the week from a technical analysis perspective. So now, having said this, let's dive into the EURUSD, which is a major currency pair. So if our expectation is that the dollar should rise, we saw that in the week ended, the EURUSD closed slightly. This is more like a doji or splendid top, because the EUR/US dollar closed marginally bearish. So we only had it close marginally bearish in the week. We just literally declined about 2 pips. So it closed marginally bearish in the week. But interestingly, from a technical analysis perspective, we've seen the EUR/US dollar. Let me check out this. So the US dollar also, like the dollar index in the opposite direction, has been on a downtrend. And in our previous video, we've always expected that there should be a correction before a resumption in a downtrend. So now we expect that this is a critical level for us to look at. How do we know that? So using the weekly time frame, let's draw up historical levels. So we draw up historical levels. Let's take the immediate support turned resistant. And let's take so these are historical levels, historical zones. So using the weekly perspective, which is time frame, so you would see that the market after having moved sharply down, has corrected to this historical zone, which could signal the resumption of the downtrend. Alternatively, breakout above this historical zone means that we're seeing a reversal to the upside. So that's a weekly time frame. So let's dive into the daily time frame. We will see that we drew up an intermediate downward sloping trend line and looked at how the market behaved in the week. We noticed that the market continued to find resistance. Aside from the historical resistance zone, the support zone that is now a resistance level, the EURUSD continues to find resistance at the downward sloping trend line, which signals to us, which indicates to us that the market may continue to short the EUR/US dollar in the coming week. The other major currency pair we looked at is the British pounds. What an interesting pair it is in the week. So it also had it declined sharply in the week. So what we saw in the British pounds US dollar was a major down decline, a major sell-off in the week. And the British pounds US dollar declined a week sharply at about 150 pips down in the week. So, and as it is for the EURUSD, when the British pounds US dollar has also been on a downtrend, hit a significant support zone, went up, which collected a bit to this historical level, and now close fully bearish, found resistance around these historical zones, and we're expecting it also to continue to decline downward. I also love to validate this zone using the Fibonacci. So looking at our Fibonacci levels, let's pick the immediate on the daily time frame. So picking the immediate on the daily time frame, we could see that also it went slightly into the retracement zone, then back below the retracement zone which is an indication that the market find resistance in trending up. Now the correction may have signaled an end and a resumption of the downtrend, a continuation of the downtrend in motion. Okay, before I dive into one or two on stocks, let's just move to gold. I've been keenly monitoring the gold instrument, and gold also. I've seen what's an interesting week for gold. So gold is trading within this moving average. It's finding support at the moving average in the weekly time frame. So we saw the gold close the week in a doji candle formation. So the gold has been on a downtrend, though on a long-term perspective, it has been on an uptrend, and it has been ranging for a while since it got to the double top about 2074. So now it is on a daily time frame. So we see it coming down and trading consolidating around some important zones. But importantly, I expect gold to resume a downtrend and a breakout below the moving average is anticipated. Now, the reason for this is this: gold attempted to rally on the daily time frame, but found resistance at the dynamic moving average. I love that too as well. So I actually like to plot, as it is, I love to plot my Fibonacci to see whether there could be further conviction on this movement. And we see that the same level is the 38.2 Fibonacci retracement zone. So my expectation is this: gold should decline to resume a downtrend in the coming week. Alternatively, above back into the Fibonacci retracement zone will mean that gold will likely found, so this is also another important level to historical level. So we'll see that it's also trading around 1860. It also finds resistance at another important level of 1868. Then the market moves in levels. So apart from watching my video on Fibonacci, I would advise for you to watch the videos on levels trading. Okay, cool. So gold, we're expecting gold to resume a downtrend in the coming week. Okay, before I end this week's market review and outlook, let us take a dive into the stock market. The S&P index closed marginally bearish in the week. It closed to 1.19%. And like I said, technically, the market drew out a buying interest. We saw some buying interest in the previous week. And the market technically went into our downward sloping channel trend line. But the week ended, it closed marginally bearish. So we saw a bearish close in the S&P. The Dow Jones index also showed a similar sell pattern. So the weekly time frame shows that at the end of the week, we saw most stocks traded on the Dow Jones closed bearish. The Nasdaq index also closed bearish. So from a technical perspective, using technical analysis, we see that the Nasdaq index also closed bearish. It's also trading in the downward sloping channel trend line. So a break below the downward sloping channel trend line would mean a resumption in the downward trend. So the three major indices in the US market saw a decline at the end of the trading week. Now let's take a dive into what to expect. We're expecting the Dow Jones to either trade to resume the downtrend, because we know it overall long term is an uptrend, and is finding support at the SMA 100. So, but within the channel trend line, we don't really expect much. We're expecting it to possibly resume a downtrend because this, where it got to, it was actually a significant, a support zone to an historical support zone. So what do we expect? We expect it to resume the downtrend. Now let's take a look at some one or two individual stocks, and I have had a close watch on GSK in the week, and what I was looking for is a setup. And on Friday, the 3rd of June, I finally have a good to go setup on GSK, Glasgow Smith line. We saw that the upward sloping trend line, which is meant to act as a resistance, as a support, dynamic support level line, has been broken. So when the market resumes today, expect to go short on this currency pair. But is everything on the sell side for the market? No, not all is on the sell side for the market. But let me just give you one. I'm looking at Pfizer in the way. Give me a clear bullish resumption signal. So we've seen it trading slightly up. It got to this level of about 54, came back down, find support at the moving average on the daytime frame, and gave us what we call an hammer. So, and it closed fully bullish on Friday, the 3rd of June. So my expectation is Pfizer also should dive up. There are other stocks that we're actually looking at, and we're going to make position in the week. I hope I've been able to give you a better insight into what to expect in the coming week. Kindly note, trading the market requires more than technical skills. Risk management, money management, trade management, and the right mindset are important elements in trading successfully in the market. Before I close out this week review, remember to click on the subscribe button to subscribe to our channel for you to get market updates, market education, interviews with other traders, and other good stuffs that will be beneficial to your trading career and trading journey. Your comments is well appreciated, and remember to share this video. Thank you, God bless you, and have a profitable trading week.